Gold has always been a safe haven asset. Investors turn to gold in times of uncertainty. Since 2022, gold has been on an upward trajectory. The price has risen steadily, reflecting global anxieties. This upward trend suggests a renewed interest in gold. Investors are seeking stability amidst market volatility. Several factors contribute to gold's recent success. Geopolitical tensions top the list. The ongoing conflict in Europe has rattled markets. The war has disrupted supply chains and fueled inflation. Rising inflation further enhances gold's appeal. It acts as a hedge against eroding purchasing power. Central banks are also turning to gold. They are increasing their gold reserves at a rapid pace. This buying spree underscores gold's enduring value. It signals a lack of confidence in traditional reserve currencies. The US dollar, in particular, is facing headwinds. The dollar's weakness is indirectly boosting gold. A weaker dollar makes gold cheaper for foreign buyers. This dynamic further fuels demand and pushes prices higher. All these factors combined paint a bullish picture for gold. Geopolitical uncertainty is a major driver of gold prices. The ongoing conflict in Europe is a prime example. This war has sent shockwaves through global markets. Investors are seeking safe havens for their capital. Gold, with its historical resilience, fits the bill perfectly. The war has exacerbated existing inflationary pressures. Supply chains have been disrupted, leading to shortages and price hikes. This inflationary environment further strengthens the case for gold. Gold is seen as a hedge against inflation. It preserves wealth when the value of paper money declines. Moreover, the war has heightened geopolitical risks beyond the immediate conflict zone. The possibility of the conflict escalating or widening is a constant concern. This uncertainty keeps investors on edge, further boosting gold's safe haven appeal. In addition to the war in Europe, other geopolitical hotspots are contributing to market anxiety. Tensions between major powers are simmering. The threat of terrorism and cyber attacks adds another layer of complexity. All these factors contribute to a climate of fear and uncertainty, making gold shine even brighter. Inflation is a silent thief. It creeps into our lives, often unnoticed at first, but its effects are profound and far-reaching. It erodes the purchasing power of our hard-earned money, making it difficult to maintain our standard of living. As prices rise, our savings buy less and less. The same amount of money that once filled our shopping carts now leaves them half empty. In times of high inflation, investors look for assets that can preserve their wealth. They seek stability in a sea of economic turbulence. Gold has historically served as a reliable inflation hedge. Its value has stood the test of time, providing a safe haven for investors. The current inflationary environment is particularly acute. We are witnessing price increases across various sectors, from groceries to energy. Supply chain disruptions, fueled by the pandemic and geopolitical events, have led to shortages and price increases. These disruptions have created a ripple effect, impacting global economies. Energy prices, a major component of inflation, have skyrocketed. The cost of oil and gas has surged, affecting transportation and production costs. These factors have pushed inflation to levels not seen in decades. The rising cost of living is a concern for households and businesses alike. Gold, unlike paper currency, has intrinsic value. It is a tangible asset that has been valued for centuries. It cannot be printed out of thin air. This scarcity is one of the reasons why gold is so valuable. This characteristic makes it a store of value during inflationary periods. When other assets lose value, gold often remains stable or even appreciates. When the purchasing power of fiat currencies declines, gold tends to hold its value or even appreciate. This makes it an attractive option for those looking to protect their wealth. Investors recognize gold's ability to preserve wealth amidst rising inflation. They see it as a hedge against economic uncertainty. This recognition is reflected in the recent surge in gold prices. As more people turn to gold, its value continues to rise. As inflation persists, the demand for gold as an inflation hedge is likely to remain strong, providing further upward pressure on prices. This trend suggests that gold will continue to be a critical asset for wealth preservation in the foreseeable future. Central banks around the world are adding gold to their reserves at a record pace. This trend is not just a fleeting phenomenon, but a significant shift in the global financial landscape. The accumulation of gold by these institutions is happening at an unprecedented rate, reflecting a broader strategy to safeguard their financial stability. This trend is particularly noteworthy as it signals a lack of confidence in traditional reserve currencies like the US dollar. The dollar has long been considered the cornerstone of global finance, but recent economic uncertainties and geopolitical tensions have cast doubt on its reliability. As a result, central banks are looking for alternatives to ensure their reserves are protected. By accumulating gold, central banks are diversifying their holdings and hedging against potential risks in the global monetary system. Diversification is a key strategy in risk management, and gold offers a unique advantage due to its historical stability and universal acceptance. This move is not just about protecting against currency fluctuations, but also about preparing for unforeseen economic challenges. The motivations behind this central bank buying spree are multifaceted. It's not just a single factor driving this trend, but a combination of economic, political, and strategic considerations. Understanding these motivations can provide deeper insights into the future direction of global financial policies. Firstly, gold is seen as a safe haven asset in times of geopolitical and economic uncertainty. When the world is facing turmoil, whether it's due to political instability, economic downturns, or global pandemics, gold remains a reliable store of value. This perception of gold as a safe haven is deeply ingrained in the financial psyche and continues to drive its demand. With the world facing multiple crises, central banks are seeking assets that can weather the storm. The COVID-19 pandemic, trade wars, and regional conflicts have all contributed to a sense of instability. In such an environment, gold's resilience makes it an attractive option for central banks looking to secure their financial future. Secondly, central banks are concerned about the debasement of fiat currencies. The value of paper money can be eroded by inflation and other economic factors, leading to a loss of purchasing power. This concern is particularly acute in times of economic stress when governments may resort to printing more money to stimulate the economy. Years of quantitative easing and loose monetary policies have led to an explosion in money supply. Central banks have injected trillions of dollars into the global economy to combat economic slowdowns, but this has also raised fears of long-term inflation. The increase in money supply can dilute the value of existing currency, making gold a more attractive alternative. This expansion of the money supply can erode the value of fiat currencies over time. As more money chases the same amount of goods and services, prices rise, and the real value of money falls. Gold, with its limited supply, offers a hedge against this erosion, preserving value over the long term. Gold, on the other hand, is a finite resource with intrinsic value. Unlike fiat currencies, which can be printed at will, the supply of gold is limited by nature. This scarcity, combined with its historical role as a store of value, gives gold its intrinsic worth. Central banks view gold as a hedge against the potential devaluation of their fiat currency reserves. By holding gold, they can protect their reserves from the negative effects of currency devaluation and inflation. This strategy is particularly important in a world where economic conditions can change rapidly and unpredictably. This central bank buying spree is a significant vote of confidence in gold. It reflects a broader recognition of gold's enduring value and its role in maintaining financial stability. As central banks continue to accumulate gold, they are sending a clear message about their trust in this precious metal. It sends a strong signal to the market that central banks view gold as a valuable asset, with a role to play in the international monetary system. This signal can influence other investors and financial institutions, further driving demand for gold and reinforcing its status as a key component of global reserves. This institutional demand is a key driver of the current gold bull market. As central banks continue to buy gold, they are not only securing their own financial stability, but also contributing to the overall strength of the gold market. This dynamic creates a positive feedback loop, where increased demand drives up prices, attracting even more investment in gold. The US dollar is the world's reserve currency, a status it has held for decades. This means that it is widely used in global trade and finance, and many countries hold it as part of their foreign exchange reserves. However, its dominance is being challenged by various factors, including economic policies and global financial shifts. Emerging markets and other major economies are increasingly seeking alternatives to reduce their dependence on the dollar. Years of fiscal deficits and loose monetary policies have eroded confidence in the greenback. The US government has been running large budget deficits, and the Federal Reserve has kept interest rates low for an extended period, which has led to concerns about inflation and the long-term value of the dollar. A weaker dollar makes gold more attractive to foreign buyers, further boosting demand. When the dollar loses value, it takes more dollars to buy the same amount of gold, making gold a more appealing investment for those holding other currencies. There is an inverse relationship between the US dollar and the price of gold. This means that when the dollar falls, gold prices tend to rise, and vice versa. Investors often turn to gold as a safe haven during times of dollar weakness. When the dollar weakens, the price of gold tends to rise. This is because gold is seen as a store of value, and investors flock to it when they lose confidence in fiat currencies like the dollar. This relationship is rooted in the fact that gold is priced in US dollars on the international market. As the value of the dollar fluctuates, so does the price of gold, reflecting changes in the currency's purchasing power. Several factors are contributing to the dollar's current weakness. These include economic policies, geopolitical tensions, and shifts in global trade dynamics. The rise of digital currencies and alternative payment systems also plays a role. The U.S. Federal Reserve's aggressive interest rate hikes, while aimed at combating inflation, have also made the dollar less attractive to foreign investors seeking higher returns elsewhere. Higher interest rates can slow economic growth, making other currencies more appealing. Additionally, the U.S.'s large current account deficit and growing national debt raise concerns about the long-term health of the dollar. A high current account deficit means the country is importing more than it is exporting, which can weaken the currency. As the dollar weakens, gold becomes relatively cheaper for buyers using other currencies. This increased affordability can drive up demand for gold as investors and central banks seek to diversify their reserves. This price advantage can stimulate demand for gold, putting upward pressure on its price. As more buyers enter the market, the increased demand can lead to higher prices, benefiting those who already hold gold. The dollar's woes are good news for gold bugs, as they create a favorable environment for further price appreciation. Gold enthusiasts, or gold bugs, often view gold as a hedge against currency devaluation and economic instability, and current conditions support their outlook.